If you are a sole trader wanting to learn about income tax and national insurance, you've clicked on the right video. First things first, if you want to know how much income tax and national insurance you need to pay, you'll have to consider your financial year. Now, your initial start date is always the date when you started trading, but you can actually set your end date to be any date that you like. But it's a good idea to set this date to the 5th of April, so it falls in line with the tax year. But it's completely up to you, as you may find an alternative date that suits your business more. Now, if you do opt in for the 5th of April, it can mean that your first year is a little shorter than the others. But don't worry, this is pretty common. Now, the UK tax year is the same for everyone. It runs from the 6th of April to the 5th of April the following year. Now, let's get back to the topic at hand, shall we? How much income tax will you pay? So, you first need to calculate your profits, and the way to do this is by deducting any allowable expenses from your self-employed income. Now, allowable expenses are any costs that relate wholly and exclusively to your business. So it could be anything from your train fare traveling to meet a client or renting out office space. It's super important to ensure that you deduct all of your allowable expenses because you pay tax on the profit that you make, not the full amount of income. And the more deducted from your profit, the less tax you will pay. It's also worth remembering that in the UK, everyone is entitled to a tax-free allowance. This applies to all of your income for the tax year, not just your sole trader earnings. And when your total earnings pass this threshold, they are taxed at the appropriate tax rates. Now, you can find out what the current tax rate allowance in the UK is by visiting our website. Now, if you've earned more than the current tax rate allowance, there are different income tax rates that apply depending on how big of a profit you've made. Now, this sounds a little bit complicated, but don't worry, I can explain it. So, there are 3 tax bands after the personal allowance. The basic rate, which is taxed at 20%, the higher rate, which is taxed at 40%, and the additional rate, which is taxed at 45%. Now, there's a common misconception that if your profits reach the higher rate bracket, for example, all of your income will be taxed at 40%, which is not the case. Basically, the income that has fallen within that tax bracket is taxed at that rate. So some of your profit may be taxed at the basic rate and some at the higher rate. It really depends on how much profit you've made. And the thresholds for each tax year, including your personal tax-free allowance, can change quite regularly, but you can check the most up-to-date figures on our website. And finally, let's talk about national insurance. If you are a sole trader, you will be making Class 4 NI, or national insurance for short, payments depending on your yearly profits. If you have any questions about income tax and NI for sole traders, go ahead and leave us a comment, and please hit that subscribe button to see more business finance content just like this. Thanks for watching.